On Friday, the FTSE 100 rose by 0.5% to close at 7,711.38, buoyed by encouraging economic data from China. However, the FTSE 250 declined by 0.58%, ending at 18,789.77. In the currency markets, sterling dropped by 0.12% against the dollar to $1.2394 and fell by 0.33% versus the euro to 1.1621 euros. IG senior market analyst Axel Rudolph noted that unlike their European counterparts, which saw gains after the European Central Bank's decisions earlier this week, U.S. indices ended the week under pressure due to high oil prices and rising U.S. import prices. These factors have reignited inflationary concerns and contributed to a 3-month low in the University of Michigan consumer sentiment. U.S. industrial production exceeded analysts' expectations last month with a 0.4% rise in output, surpassing the anticipated 0.1%. This was driven largely by a growth of 0.8% in business equipment output and a climb of 0.7% in materials output. Despite this, manufacturing production experienced a modest rise of only 0.1%, still lagging behind its performance from the previous year by 0.6%. The overall industrial operating capacity in use saw a marginal increase, reaching 79.7%, slightly above the anticipated 79.5%. Meanwhile, U.S. consumer sentiment remained relatively stable in early September, with the University of Michigan's Consumer Confidence Index presenting a slight dip to 67.7 from August's 69.5. China showed signs of stabilization after several months of underwhelming economic metrics, as both retail sales and industrial output surpassed expectations in August. Retail sales growth accelerated to 4.6%, indicating a rebound in consumer discretionary spending, particularly in cosmetics, smartphones, and jewelry. China's industrial production in August recorded a 4.5% year-on-year increase, outperforming July's 3.7% and surpassing economists' 3.9% expectation. However, Hypnosis Songs Fund declined 7.01% following the company's announcement that it was planning to sell some song rights to manage debt and fund share buybacks. Real estate firms Derwent London and Great Portland Estates experienced downturns of 0.05% and 1.22%, respectively, despite Goldman Sachs upgrading both companies' shares.